Well, hello, traders and investors. I'm Ellie Little, and this is your daily NeoTA wrap. Take a look at these markets from a neoclassical perspective, asking ourselves each day what happened today, what might it tell us about the coming ones. Recently we haven't gotten anything but up, up, up. Well, today's a little bit different. We actually got some downside. We saw some folks not profit by the end of the day, which is something we haven't seen in about 3 weeks. We'll talk about that. We'll talk about a lot more. I do the show 4 times a day. 4 times a day. How about 4 times a week? Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube under the channel L.A. Little. If you haven't subscribed to the show and you want to, just reach up in the right-hand corner. Anytime I push content that's public, you'll get a notification. Here's the markets. Here's what happened today. You got a 1.29% on the Russell to the downside. Of course, that's been the leader on the way up. Finally got some downside action there. Got it across the board pretty much everywhere you look. The only place you didn't get it is those places that have been going down and not up, and that's gold, silver, bonds. That's the story. That's the way it looks. Let's take a look at the S&P 500. So if we look at this and ask ourselves, what do we have here? And we say that from a neoclassical perspective. In other words, we're looking to see, what happened today. What does it tell us, right? All we have is a pullback. We didn't even test the highs from Friday. We don't have much in the way of volume expansion, right? It certainly looks higher than Friday, but Friday was half a day. And so from that perspective, this looks like a normal little correction finally taking place. Now, where can it trade to? That's always the next question. And I've shared that with subscribers, with members of the site. And they know where I'm looking. And, you need to pick out what that is. A lot of people like to use Fibonacci retracements. Others use other types of things. We use supply and demand. We use anchor bars. Anchor bars are significant bars. Those bars tell you something significant. We also use the concept of a retest regenerate. We go to the prior high that was broken, the last one. We ask ourselves, where is it? And can we get back into it? And do we do it within 6 bars or not? In other words, once we break out, which is what this green arrow is showing you, how many bars does it take before it comes back? If it comes back within 6 bars, right? If that trade comes back and we do it within 6 bars, you can expect most of this zone to get tested. If it's more than 6 bars, then it's just the top part of the zone. And so we use that kind of knowledge to know, on a probability basis, what to expect. We're 4 bars above it now. If we come back hard and fast, we'll be back into it within 6 bars. That will be the area that we should buy or expect that we should be able to buy. And that's where you should expect the retrace to test back to. Now, if you pull it over and think about it on an intermediate term time frame, the story's a little bit different because the swing point high here was just recently broken, right? Just a bar ago. And so if we get back into it, we should expect the bottom of that bar. If we take that number, 2168, and if we go back now to our daily chart, 2168 brings you where? It's the bottom of this bar is 79. 68 would take you into the top of this bar, basically, right? And so if you're looking at this and you're asking yourself, where are the spots, right, just based on retest regenerates, I haven't even talked about anything else, those would get you somewhere in these 3 areas. And so, the places that one should be thinking about purchases are those 3 areas, depending on those criterion that I laid out just a second ago. That's the S&P 500. It's going to look a little bit different at every chart that you look at, for example, and I will pop over to the Russell. If we look at the Russell's going to look very different, right? The swing point highs are way back here. Is it even going to make it there? Probably not. And so then you have to ask yourself other things like significant bars. Where are they? Where are their tops and the bottoms? Where do you have, congruent areas? For example, if I'm looking at a congruent area here, I can see all the volumes on these 4 bars. Those 4 bars are from here right down to this one. And so somewhere in these 4 bars, well, the absolute congruent or overlaps are those 3 areas. And so you have to expect that that's going to be significant areas on the way back, and that's where one should be considering things. Tops of them and the congruent / overlapping areas. So that's the Russell. You can go down the list. You can do this with all of them. You can do this with your sectors. You can do it almost anything. That is what I do. That's what I try to teach members to do, because it gives you the probabilities, and anytime you put the probabilities in your favor, just like the house out in Vegas, they usually win over time, and that's what you're after, and that's what we do. Let's see here. Anything else interesting today? Currencies. It looked like the currencies were pretty flat. The dollar was down. Just really doesn't want to give it up much. 26.10 maybe is where it's going to try to get to. Potentially that 25.90 area if it really does sell off. But I think it's going to be hard to get this thing to sell off at this point. If you look at the sectors, right, you started getting pullbacks in all of these. Here's the XLY, for example. But again, just like the S&P, in most of these you did not see volume expansion. You did see it in a couple of places. XLE had a little bit of volume expansion, certainly had a wider bearish engulfing bar. You didn't get that in most cases. Here's the transports. Transports actually got a little expansion as well. But if you look at some of these others, like here's the financials, you really don't have that much volume expansion on the way back. And again, just like I talked about in the others, here your swing point highs are way down here. There's no way you're going to come all the way back to them to start with on this time frame. And so what you have to do is go look for those overlapping congruent areas, and that's where you should expect price to try and trade back to. Here's that big spike bar. There's the congruent area on it. So in other words, one could look into this area as a potential first place on the way back. You should be picking out those areas on those things that you want to buy, whether it's indexes, whether it's individual stocks, all of those. This strength isn't going to go away. Even if it is, it's going to take time. When you get this kind of a thrust on this kind of volume, it's not simply just going to go away. And so you need to be picking out what you want to buy and where you want to buy it. And if you don't know what you're doing, when we do open membership back up at TA today, you might ought to check us out, because that is what we do. That's it for tonight. Have yourself a great one. I'll see you next time. Good night.